Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Party, party, party. Woohoo. Happy TGIF to everybody. Friday, the 15th of May. We're halfway through this month with a couple weeks to go. And I think in Canada, actually, we have our new tax filing deadline. Was pushed back to the end of May. I'm not quite totally sure on that, but if you are Canadian, check with your accountant. I've been chatting with mine recently, and she's wanting us to get our butts in gear. So, as you can see from this image, things are relatively soft breadth-wise, but they've sort of taken the fluff out of the market. We might actually end up Wing out here and starting to work our way higher, but for the time being, I'm kind of just not overly aggressive in the stock market, but I am working some stinky bids against levels. Typical Brian buying against the bottom end of the range off of W's. I think you know how the story goes. But on balance, considering seasonality, and interestingly enough, we'll talk about it in a bit. Bitcoin sort of leading the market, looking a little toppy here. I don't think we're quite ready to call a top, but interestingly enough, because Bitcoin has been sort of leading the stock market, if we do end up topping out here, that'll probably be sort of the final piece to the stock market top here in the short term. But we'll see what happens. Purely conjecture. For your guys' conversation purposes, like I said, I try to stick to a relatively simple message day in, day out. We'll take a look at some of the bigger risk-on, risk-off proxies, what they're doing, tell you a little bit about what I'm sort of thinking in the stock market, any bids I happen to be working, talk a little bit about Bitcoin, sort of where do I think we're going in the short term, purely Brian's opinion, no guarantees from the management, of course. And then we'll finish off taking a look at a couple of the altcoin ideas that we're kicking around the site. So first and foremost, as always, what the heck is the US dollar index doing? We actually had some really nasty econs come out of the United States here this morning, which really shouldn't surprise anybody. Retail sales, consumer-driven economy, retail sales falling right out of bed. But interestingly enough, we had things like consumer sentiment reports come out, and a couple industrial production numbers that actually were suggesting that things aren't as bad as people sort of were anticipating they would be. So as a result, not a massive capital flow out of North America. If anything, as you can see, U.S. dollar actually ticking up here. And I've said recently I'm very, very leery of any international currency. Stay the hell away from things like commodity-based proxies. And I'm also starting to get worried about our brethren over there in Europe because I think the euro could get whacked here. This looks really dangerous. We've talked about this at length. Very, very leery about euro right now. So U.S. dollar appears to be pointing higher here. We haven't made a new high here yet this morning, but looks like it's going to finish the week on a fairly strong note. And I think we've been sort of talking to you recently. I really wouldn't be surprised if we actually have to ratchet back up top here. Kind of thinking, and actually I don't really have it here, but we could go things like AB. And I think I put tweets out and to the effect of bullish bots and stuff like that setting up off the US dollar. Oh boy, look how high that takes us. Wow. Seriously? Ay, ay, ay. So, I don't know. The interesting thing is if you look at the US dollar index from the last fear cycle apex, 1980, it went absolutely parabolic straight up through that fear cycle apex. So, ironically enough, this actually is par for the course. That's pretty much what's supposed to happen through these fear apexes. And as I've said to you repeatedly, we have two more key pivot events to happen in 2020. So this is going to be a slog of a year. There's no doubt about that, in my opinion. So there's your backdrop. Looks like people are getting a little bit more worried and parking their money in things like T-bills and U.S. dollars that are really, our conversations about how the U.S.-led interest rate market basically came to the rescue of the U.S. shale industry when Russia and Saudi Arabia tried to collectively put them out of business. Remember, the U.S. is still driving the bus here, so if that's the case and all hell breaks loose in the world, are you going to run into Russian rubles if you're scared shitless, or are you going to run into U.S. dollars? And that's a brutal reality of the world that we're in right now. Probably won't stay that way, but probably through my lifetime it will. Anyway, moving on. Risk on, risk off, looking at the stock market. Remember we had talked yesterday about how the oil market looked like it was perking up here. Looks to me like that oil market has got some traction. Remember we sort of walked through this 4-hour setup yesterday. Whoops. I can look at 3 hours, but let's do 4. Double bottom, entry. You can see as the market's moving up here, if we hit 30.28, they should move their stops to scratch. And ultimately, those oil peeps are looking for $34, $35 a barrel here going forward, which, of course, we've talked about before is basically just going to fill in these gaps. To be honest with you, I was kind of hoping that the oil market would just calm down and get out of the spotlight, but clearly the market's not interested in Brian's opinion. And it's working its way higher. You know, traders got to trade. So if you are a trader and you are long crude and you're enjoying this rally, way to go. So stocks, and we kind of mentioned this yesterday. We came up and we almost smiled here, but look at this railroad tracks. Bang, bang. No, I do not want to smile. I am not done yet. And it rallies back up. Probably led, and the rags that I've been seeing this morning, they're sort of saying stocks are catching a bid because oil is moving higher. So this is a great example of that risk on kind of thinking, where one market can drag another market higher. I'm not really ready to say that this is done. Our rule at TRI is that we have to see market structure on the other side of a trend line to actually give us a sell signal here. So this is an excellent analogy of that. If you had shorted here, you'd be like, woohoo, look how smart I am. And now it's just like, well, all right, now I'm back to scratch. And we could very easily ratchet right back up against these old highs. So if you do see an M come in now on the other side of the trend line, then I think we got something to work with on the short side. As long as crude oil is pressing higher here, I can't see that happening. But we'll see what happens. And interesting to see how this railroad tracks reversal on ES came in just the moment crude oil actually broke out there. So that's a really cool illustration. So that's risk on. Seems to be catching a bit of a bid here today. Risk off, and this is where I'm a bit perplexed. We have been talking recently, of course, about bond market trying to work its way higher. We talked lots recently about strangle trades on the bond market. So, you know, if you're long, you're short, whatever. My hunch is, and I basically the same message before, if we do end up Wing out here and going through this high here, which is, for your reference, 183 and 230 seconds. There's a funny quote, eh? Then probably the bull's in charge, and I think those are bought long levels. Remember, we had like a bought long working through here, and ironically enough, that's still working. If we do actually go and M out here, then oh boy, that spells trouble down the road, and that's probably like oil actually takes off and rallies back to like $50-$60 or something. I don't know if that's going to happen. Who knows? At the same time as we have crude moving up, and I was kind of curious because usually this doesn't happen. If anything, it's a great analogy of the screwiness of this current market state, sort of in transition between cycles. We've got the gold catching a bit of a bid, and oil catching a bit of a bid on the same day. What was really cool about this, and this is really a shout out to all the silver bulls, is that I think finally. And it turns out that that silver bot trade that I was considering, I got screwed by the company. Thank you very much, management. And this is why guys like Gordon Gekko get all upset at board of directors and stuff, because they end up screwing shareholders. But anyway, it's here nor there. But the point is that, and actually I thought I put the tweet out. I thought I had the chart already preloaded. But it was really cool to see the gold and silver side by side. Let's see if I can find that. Yeah, here we are. So you can see the one low, two lows, three lows, four lows on the gold. Nice little double bottom. Yeah, it's just on the break of the trend line. We'd actually like to see a W on the other side of the trend line here. But nonetheless, there is another bigger W coming in on a close above this 1750 area. So it looks like the gold's getting ready to rock and roll here. But this was so cool to see how the silver actually fired the bullish bot and then put in this nice little consolidation. And I even said to you, I wouldn't be surprised if there's a little bot just right inside this bigger bot. And sure enough, woohoo, away she goes. And this is cool because for the longest time, the gold-silver ratio was just one directional. Keep in mind, historically, this gold-silver ratio is supposed to be sitting at about 15 to 20. We're at 120, 130, now even now at 100? What the hell's going on in this world? Really, silver should be a hell of a lot more expensive if gold is $1,700 an ounce. So, if anything, the way that I'm interpreting this right now is finally the silver bugs are getting some vindication. So, way to go, silver. And if anything, this is kind of good because usually when silver outperforms gold, that actually is a good sign for the economy. Maybe we've actually hit some sort of base here. And things like industrial production and stuff like that are actually starting to feel a little bit more bullish. Remember, silver is an industrial metal. So, fascinating to see. And, you know, the silver bulls finally getting some vindication here. I thought that was really interesting. And it just goes to show, you know, Mr. Smarty Pants Brian, I took a stock bet on this move and I got my ass kicked. Way to go, Brian. If I had just bought the commodity, I'd have my stop at scratch right now and I'd be laughing. Oh, well. Live by the sword, die by the sword. You better get too used to it if you want to play this game. There's an interesting name. We'll talk about it in a bit. But anyway, so interesting to see the gold and the oil moving up at the same time. We don't usually see that. So maybe we'll get a little bit of re-inflation. Now, of course, the Fed's taking short-term interest rates to zero. So technically that means if you're an institutional player, you can just go borrow as much money as you want. You want to go and buy some silver? All right, go buy some silver. Want to buy some Bitcoins? Go buy some Bitcoins. I got to sneeze. Hold on a second. All right. Moving our conversation along, sort of anecdote that the junior market's a little bit sicker than the senior market. And also sort of tempering our enthusiasm about like, oh my God, the junior stocks are going crazy here. The Russell 2000 versus the Dow Jones Industrial Average did actually end up going and emming out here yesterday. Nice little counter-trend rally, but really, you know, our bullish enthusiasm for the junior stock market has to be a bit tempered with this image. And really, we can't start going, all right, expect massive outperformance from the junior stocks until this actually starts Wing out and we actually break this pattern up here. So that's going to take a little while. I think this really speaks to the seasonality of the stock market. Sell in May and walk away. And usually the junior market goes through the shitter right into the end of June, beginning of July, and we call this the summer doldrums. So my hunch is, you know, if I was trading this spread, I would probably say we're probably going to come back down into reload zones against old lows and really test whether this low is for real or not. But my hunch is this also, too, is going to take some time to play out. I mean, we're not in a big hurry to see a bottom come in here yet anytime soon. Does that mean that I'm not interested in playing the junior market? No. But, you know, what I want to do is I want to find stories that have W's working, and I want to work stink bids at cheap-ass levels. So here's a really good example. This is Funko. They make a whole bunch of action figures, and they were in the Baby Yoda doll business and all that kind of stuff. I think they really screwed up last fall, and so that was one of the reasons why the stock just absolutely collapsed. Well, you can see W's are coming back in. And I've heard that the Baby Yoda talk is ramping back up. And actually, one of our site members, actually, he has notifications on his phone. And he started to get a whole bunch of marketing crap from Funko people. So, obviously, they're ramping up for some sort of marketing campaign. You can clearly see from about 4 and change, I picked it up at $3.91. This is one reason why I like working stink bids, right? There's the gap. Don't chase. If you really want to get in on this thing, okay, fine. Work your stink bid down below, and I got filled here the other day. I have no idea if this idea is going to work or not. You can see all the lows that I'm going to risk against, and if we lose these lows, then I'll just walk away. You know how the game goes. Anything else to report here? Oh, yeah. Here's a cute little one. Same logic. Not really any difference. I think I've told you guys about this before. Interesting, they actually came out with some earnings numbers that were relatively positive. Higher highs and higher lows defines a bull market. I am long from the W, so we'll see what happens. Wish me luck, everybody. And you can see if this thing gets its act together, does it have any room to move up here? I'll leave you the answer to that question to your imagination. So that's kind of stock market thinking. Not banging out any doubles today. Market's relatively soft. It is interesting, though. There's always a bull somewhere. And on the site, we're a community of traders. And this was a win that somebody just posted about 10 minutes ago from Benjamin. Look at that trade. And I mean, how cliche. You can all see the W's. You can see the retest of the W's. You can see a W that came in on the retest of the original W, and kapow! I didn't happen to take this, but this is the kind of shit that you see on the TRI site day in, day out. This is what we do. So congratulations, Benjamin. Nice trade there, Slick. So with all that said, let's head on over to the corn. Talk a little corn. There's no doubt about it. We are up against some pretty interesting levels here. And so as a result, I really wouldn't fault anybody for either taking some profits off of late, and actually, what am I looking at here? Oh, this is an hourly chart. Sorry, guys. I wouldn't fault anybody who was like, Brian, gee whiz, we're right up against the top end of the range. I'm just going to take some profits. I bought some down here when everybody was like, wrecked, it's the end of the world, right? And, it's not a bad model if you want it as one of your reasons to consider taking a trade. I only buy Bitcoins when I see right across Twitter wrecked and liquidations and, this guy's falling kind of talk. That's not a bad strategy. And then, of course, on the flip side, when you hear fund managers and big wigs in Wall Street coming out and touting to bullishness on the corn, maybe you ought to look at the chart and go, now, why on earth would that guy be doing that? But anyway, point of the matter here, I don't know whether we've actually topped here yet or not. I think it's super important as professional traders that you always keep an open mind. You just don't know what the hell's going to happen. And if somebody tells you that they can predict the future, I would suggest you turn the other way. I've been at this game a very long time. Great analogy of prediction, future prediction people. They did a study back in the early 90s, and they looked at all of the sort of I can predict the future people from the 1980s. Look through all of the newspapers. Not a single person predict the collapse of the Soviet Union. Now, you would think that that's a pretty big historical event. And if you could predict the future, somebody might have seen that. And not a single one of these fortune tellers saw it coming. So, it's just another great analogy. Don't get into the business of predicting the future. You trade setups. With that said, like we said earlier, trade location, we had double divergence. I went in very great length yesterday for all you on YouTube. What does double divergence look like? We've got location, and now really the final piece of the puzzle for a guy like me is, do I have structure? If I get all three of those, then that's a setup, and I have to take the trade. But until that happens, I can't really do much. And this is an interesting analogy because we have come into location. Like I said yesterday, we have very blatant bearish divergence on the indicators, right? They're all screaming divergence. Willie is stupidly overbought. But the market can remain illogical far longer than any of us can remain solvent. So until I actually get my trade set up to come in, I'm just watching. I thought it was really cool, and I sort of talked about it yesterday at length on social media. We had some just incredible, this is a 15-minute chart, some just absolutely incredible intraday setups. But I don't, for a position kind of person, you can't trade this position-wise. These are like day trades and stuff. This is a concept, of course, that we do teach in our education program. And ironically enough, for the level 3ers, they have to read a bunch of stuff on harmonic trading before we get to that week. And what a great sort of lead-in for them as they're studying and reading various different documents. They actually have a living example of harmonic trade setup come in here overnight on the corn. So they're super pleased that this is happening as they're studying this material. But for higher time frame people, for those people that, hey, I follow the trend, all that kind of conversation. Actually, where the hell did the damn chart go? I guess it was over here. I'm not ready to put a fork in this thing until we actually start getting some sort of structure here that says, yep, I'm a big fat M, and down we go. Right now, actually, ironically enough, we have what's called a tweezers. So you can see you got a little bit of a wick up top, a little bit of a tail down below, and ironically enough, that basically defines our trading range for the time being. And interesting, when you drill down to lower time frames, those are actually starting to look very toppy. Here is the hourly chart on stamp, and hopefully everybody can see that's pretty darn well-defined M. And we even had counter trend rallies against the M's to set up reload shorts. So lower time frame players, you can see these setups are coming in. And probably my hunch is if this turns into a big honkin' M now, then that's it. Our rally is done. But we're not here there. We're not here there. We're not there yet. And what I'm cautioning people, you just don't know in capitalism. That's why the market does what it does. It is a price discovery process. You might find, and you just never know in this business, but you might find that we actually consolidate in here, paint 3 higher lows, what Brian's thinking now, and we might work our way right up top here into the top of this megaphone. That is totally realistic in this market state. So the point I just wanted to make to you is that, yes, we are definitely up against previous highs. Location. Yes, we have bearish divergence. I'm just about at the point where I can put on a short, but I have to get some sort of structure here. All right, I think I'll leave the conversation at that about Bitcoin right now. Only other thing I wanted to touch on with you guys, because it's fun chatting with you guys about this. Good old poop coins, altcoins. It's interesting to see how this son of a gun is just hanging in here. I think I told you recently, I probably would have been inclined just to walk off and let the dust settle here. Excuse me. But you never know. In this business, we might pop up, hit those highs, and all those people are like, to hell with me, stop trailing. I'm just going to ride this thing. I don't necessarily agree with that strategy, but nonetheless, it is what it is. Maybe this market needs to hit this AB equals CD before it's done. I don't know. I don't have any outright short signals on something like this. Right now, I would just be sitting, waiting for a consolidation. We might have to paint higher highs, and those higher highs might actually start creating divergences on momentum indicators and stuff, which actually might paint an even better trade setup down the road. Right now, I don't have anything here. And then, finish off. Don't lose sight about these juniors. There is some great money to be made on some of these names. I thought it was really interesting watching this storage. Kevin and I were looking at this morning. Interesting, 3-bar pattern. Nice little empire that could be firing here. It gives you a relatively small risk window against these previous lows. And you tell me, if you went and picked some up on that empire, and I might just do that tomorrow. We'll see how this candle finishes here today. at 1100 sats. Is it realistic to look for 3,000 sats? Explore this wick and get yourself some free coins through any kind of rally. If this W comes in, man, look out. And then if we zoom out over time, which is so fascinating. Remember I showed you this. I teased you just earlier there a minute ago. If we actually zoom out, and this is why I really like the altcoin space right now, you tell me. This is it versus US dollars. Is there any room for this thing to move up at all? I think I'll leave the conversation at that for today. My hunch is that probably over the next, say, 6 to 12 months, man, if you can, force yourself to accumulate this stuff, because at some point we will go back into this nutso-ness when all of this sort of sickness talk and Fed printing press and all that kind of conversation is over. We will head back into this type of environment, but it's just not now. But the irony of it all is that I would actually argue this is a fantastic opportunity to be accumulating these names. So you can do it slowly. You don't have to bet the farm all at once. But opportunity is now here when I look at charts like this. All right, everybody, why don't we leave it at that? Have yourselves an awesome rest of your day. All the best, and bye for now.